What does an $8 million fortune actually look like? You'd probably picture luxury cars, tailored suits, or, a sprawling mansion. But what if I told you it actually looks like a guy who held his old coat together with safety pins? Welcome to This Explainer, where we are unpacking the fascinating science and psychology of building true wealth. And we're going to kick things off with the absolutely shocking true story of Ronald Read. Now, Ronald was a janitor and a gas station attendant. He chopped his own firewood well into his 90s. He drove a secondhand Toyota, and his biggest luxury in life? A peanut butter English muffin at his local diner. He never drew a big salary. Yet, when he passed away in 2014, his family was completely stunned to discover he had secretly amassed an $8 million fortune. So, how is that even possible? How did a reclusive janitor with a high school diploma completely outperform highly educated, incredibly well-paid professionals? Well, it all comes down to a really fascinating paradigm shift, moving away from the exhausting pursuit of visible status and toward the quiet power of true wealth. Let's dive into the stealth wealth paradigm. To understand Ronald Read's secret, we just have to look at the math. Check out this staggering number right here. 9,900%. That is the actual return Read was able to harness during his peak earning and saving years from 1950 all the way to 1990. To put that in perspective, during that same time, the S&P 500 averaged annual returns of about 11.9%. Read was an absolutely relentless saver. In fact, his neighbors estimated he invested $40 out of every 50 he made. He funneled those savings into blue-chip stalwarts. We're talking companies like Procter & Gamble and Johnson & Johnson. Compounded year after year, that 9,900% return meant every single dollar he invested in 1950 basically turned into over $100.
The secret sauce here? Just dead simple compound interest. He wasn't day trading options, he didn't use crypto, and he didn't take on risky leverage. He proved beyond a shadow of a doubt that you absolutely do not need a huge head start, a massive executive salary, or Wall Street connections to build immense wealth. What you actually need is time, consistency, and the discipline to just step back and let your money work for you in the background.
Section 1. Rich versus wealthy.
So, financial writer Morgan Housel points out something really crucial. Society is constantly pushing us to optimize for being rich rather than being truly wealthy. Being rich is basically a function of your current income. It's about spending freely, buying the fancy car, the big house, living for today to validate who you are to the outside world. It's highly visible. Being wealthy, on the other hand, is invisible. It's the money you haven't spent. It's having a high net worth, prioritizing saving, and ultimately gaining the ultimate freedom to do what you want, when you want, with your time. Rich is about buying stuff. Wealth is about buying time.
We often fall into this trap of thinking that if we just buy a little more, we'll definitely be happier. But a really fascinating study from the University of Pennsylvania tells a very different story. They found that for unhappy people, happiness only increases up to an income of about $100,000 a year. After that point, more money just doesn't actually lead to more happiness. And this introduces the incredibly dangerous trap of lifestyle creep. As our income rises, we start buying fancier things just to maintain our baseline level of satisfaction. We end up endlessly chasing a finish line that just keeps moving.
Section 2. The hidden opportunity cost.
Why exactly is buying those visible status symbols so destructive to our financial future? It all boils down to opportunity cost. By definition, it's the value you sacrifice when you choose one option over another. Because our resources are finite, every single allocation of capital is a trade-off. Every dollar you spend on upgrading your car just to keep up with the Joneses is a dollar that has been permanently stolen from your future freedom. You aren't just losing that dollar today, you are losing what that dollar could have blossomed into over 20 or 30 years.
You see, there are two sides to opportunity cost. Explicit costs are easy to spot. They're the tangible expenses hitting your credit card statement. But implicit costs? Those are the silent wealth killers. They are the indirect, intangible losses. Let's say you buy a luxury watch. The explicit costs might be $5,000. But the implicit cost is the tens of thousands of dollars in missed market growth and compound interest that your $5,000 would have generated if you just invested it like Ronald Read did. It's honestly these hidden implicit costs that truly prevent high-income earners from ever becoming wealthy.
Section 3. The art of delayed gratification. Why do some people effortlessly build wealth while others, even those pulling in massive salaries, just constantly live paycheck to paycheck? Well, the secret ingredient isn't necessarily a higher IQ, it's mastering delayed gratification. Take a look at this classic piece of psychology.
the 1960s Stanford marshmallow experiment conducted by Walter Mischel. In this study, kids were brought into a room and presented with a single marshmallow. The researcher told them, hey, you can eat the marshmallow right now, or if you can just wait until I come back, you'll get a second marshmallow. The study famously found that the kids who were able to delay their gratification and hold out for that second marshmallow ended up having vastly better life and financial outcomes as adults.
So I want to ask you directly, would you wait for the second marshmallow? Take a hard look at your current financial habits. Are you making impulsive choices today just to get a quick hit of status or comfort? Are you essentially eating your financial marshmallow right now instead of waiting for the massive compounded payoff that comes later in life? Because building wealth absolutely requires the discipline to say no to something you want right now so you can have something vastly better down the road.
And this whole mindset translates directly into an actual investment strategy, perfectly summarized by a quote from Warren Buffett: "The weeds wither away in significance as the flowers bloom." When you hold a highly diversified portfolio of investments over a really long period, you are absolutely going to pick some losers. I mean, Ronald Read himself held shares of Lehman Brothers before it completely collapsed. But through the magic of compounding, the massive gains from your winning investments will completely overshadow the short-term losses of the duds. You just have to be patient enough to let the flowers bloom.
Section 4. The Stealth Wealth Strategy.
So how do we actually emulate Ronald Read, dodge the trap of lifestyle creep, grasp our opportunity costs, and practice delayed gratification? We use the ultimate life hack, stealth wealth. It's the deliberate practice of keeping your income, your assets, and your lifestyle completely under the radar. It means explicitly rejecting the whole societal status game. A stealth wealth practitioner could literally be a multimillionaire, but you would never know it because they drive an average car and live in a modest neighborhood. They understand that the fundamental purpose of money isn't to buy the attention of strangers. It's to buy personal freedom and long-term security.
The benefits of this approach are absolutely massive. First off, it stops lifestyle creep dead in its tracks, allowing your savings rate to absolutely skyrocket. Second, it grants you incredible personal privacy, naturally keeping you away from scams and unwanted attention. Third, it drastically cuts down your daily stress. You no longer feel that exhausting pressure to maintain an expensive facade just to impress people. And finally, it ensures your relationships are authentic, built on your character, not your bank account.
To wrap this all up, the actionable steps to mirror Ronald Read's multi-million-dollar success are surprisingly simple. Step 1. Live below your means and fully embrace the stealth wealth mindset to maximize your savings. Step 2. Take those savings and buy broad, highly diversified, low-cost index funds. Something like the Vanguard S&P 500 ETF is a prime example of a vehicle that tracks the biggest companies in America with incredibly low fees. And step 3, step back, ignore the short-term noise, and let the math of compounding work its magic over decades. I want to leave you with one final provocative thought to carry with you today. Every single time you open your wallet or check your bank account, ask yourself, are you buying status or are you buying freedom? The choice is entirely yours. But as we've seen in this explainer today, choosing freedom is the quietest, surest path to an incredibly wealthy life. Thanks so much for joining me, and I hope this completely changes the way you look at every dollar you earn.